just some basics here around term whole life, and another one that's become very popular in recent years called the FIUL. So the term is this is going to be the most affordable coverage. It's set for a period, usually 10 to 30 years. It's very affordable in most cases, but it's a death benefit only. There's no cash value. It's good for those temporary needs. Whole life is designed to stay in place for your whole life. It is permanent coverage. The premiums are still level. There's a guaranteed death benefit. It builds guaranteed cash value in the form of dividends from the life insurance company. Now, those dividends can change over time, but there's a guaranteed cash value that's available in these whole life policies. And then, yeah, you can access that cash value later on for savings. You can take loans from the policy. There's more flexibility there in what you can use later on once it's built up this cash value. The FIUL is somewhat of a hybrid. The universal part means that the premiums are flexible. So you can have an amount that you plan to pay, but it can be, you can put in a little bit more or a little bit less as long as there's enough cash value in the policy. There's some flexibility there. The cash value instead of dividends, the growth is going to be tied to a market index like the S&P 500. So that would be how your rate of return is going to be calculated each year. But the fixed part means that it cannot go down. You cannot have a negative return due if the market drops or the index that you choose drops. So it gives you that upside potential with that downside protection. And this is just a unique way to go after the higher rate of return, but give yourself a floor each year that it's not going to go negative, and it's going to go up incrementally over time. What hopefully, as you've seen, there are a lot of different options here that you have. And the best way to do this is to integrate it based off of your unique situation. Are you married? Do you have kids? Maybe you're not married, no kids, but you have someone else who counts on your income. Maybe it's a parent that you're caring for in their older age. Looking at how these different coverages work together is going to give you the peace of mind knowing, okay, if something happens to me tomorrow or in the future, the loved ones that are counting on my income, that there are benefits available to take care of them, whether it's through life insurance, whether it is your TSP account and how to pass that on to beneficiaries. There's some new rules that have come in place over the last few years due to the Secure Act. Again, if you need help with that, just schedule that one-on-one appointment. Let's talk through it, how all of these things can work together, even Social Security and health insurance. We provide comprehensive planning around these topics and not just cover one like life insurance. And then, what do you have a current gap? Is there a gap in your coverage right now? How to best meet that? Or maybe there's not a gap, but there's just a more affordable way to provide for your family through either a group plan from United Benefits, or maybe it's a private policy. Maybe it is one that you have to go through underwriting, but it's going to be cheaper for you and your family to go that route. We're an independent insurance company, so we're contracted with I think it's over 50 different companies now, so we can shop this out, find the best price for you based on your situation. So as we wrap up, just some recommended action steps to take. Go ahead and review all those different beneficiary designations. Make sure that they're updated. Confirm that your FERS benefits, your life insurance, your TSP, make sure all of those beneficiary designations are up to date. Review those survivor annuity elections if you're already retired, if you're planning to retire soon. Again, don't wait until the end. there are some actions that you can take in your 40s and 50s to put a plan into place now that's going to make that survivor annuity election a lot easier, allow you to maximize that pension instead of waiting until you retire when it may be too late or too expensive. And we can help you calculate, okay, what are your true life insurance needs? Instead of just having a random figure out there like 2 times my salary or 5 times my salary, you may see there's a lot of financial planning articles that say you need actually 10 times your salary to provide for your family. But instead of just picking a random number, let's look at what your situation is. What's your mortgage? How old are your kids? Are you married? And calculate what that need is and put a plan in place that's customized for you instead of just a generic person out there. Yeah, and then my advice would be I've seen this happen too many times over my 20-year career is we don't like to think about our death, and we put it off, we procrastinate, and we wait to make that decision. If I could give you a piece of advice is don't put it off. It's going to be an easier process in most cases than than you're probably imagining in your head, and the peace of mind that you'll get after you've completed this, knowing what's going to happen, it's very, very valuable for most employees once they go through this process and put their plan in place. A lot of peace of mind there. So with that, thank you for your time, your attendance today. We look forward to serving you in the future, and we look forward to seeing you on next month's webinar.